There's four sectors that are currently leading the way, and one sector which is currently leading the way to the bearish side. In today's video, I'll show you how to very quickly identify each of those sectors using our free utility labels indicator. Now I've loaded in the utility labels indicator. If you don't already have this, check the description box below. I've left a link to download it for free. Once you've loaded in the utility labels indicator, you'll see these labels plotting on your chart. These labels contain the different sectors, and the labels will change color based on which market stage we're in for that particular sector on the particular time frame chart you're on. I'm on the daily time frame, and on the daily time frame, it's XLK, the technology sector, XLY, consumer discretionary, XLC, communications, and XLP, the consumer staples sector, which are leading the way. Now, this is not just based off of today's activity, but rather the market pulse indicator, which looks at the broader trend. It gives you an idea of what market stage this particular sector is in, and you can ride that market stage all the way up until you start to get clues of that market stage starting to reverse. If we were to contrast XLK with XLB, you can see XLB is the one sector in which the market pulse is currently red on the daily time frame chart, and it's a good sector to look for short side setups. Now in today's video, I want to focus on the long side setups, and in particular, we're going to break open the XLP ETF. So if I load in XLP now, XLP stands out for a handful of reasons. Most recently, XLP has had a momentum shift. We can see that the 3 EMA has crossed above the 8 EMA back in November, and with today's close, we're getting that shift one more time. So that tells me that XLP is a sector that I want to start to pay attention to for more bullish side pressure. Now inside of XLP, I started to look at some of its top holdings, and there was one which stood out, which is Coca-Cola. Now the reason Coca-Cola stood out was because of its implied volatility. If we come into the trade tab here inside of Coca-Cola, we can see that the current IV percentile is 44%. Think about that for a second. When's the last time you saw Coca-Cola being anything above that 20% in the IV mark for the type of volatility we typically see? That tells me that there's some juicy premiums that we can take advantage of. Now in terms of the actual trade and how to put it on, inside of Coca-Cola, the intraday volatility is what I'm looking to take advantage of. Today, with the morning volatility, Coca-Cola breached the bottom end of our lower volatility box models for the long side entry, and these are the type of volatility mismatches I'm looking to take advantage of. If we come into the 38 days to expiration series, the options there for the $60 strike price, which is the place where I'd like to build the overall position, isn't anything that I think is too attractive, a 0.65% return on capital for that particular strike. This, by the way, is the wheel options calculator script, and for all Volatility Box members, this is built together and it's available for free with your membership. Now, instead of the 38 days to expiration series, let's come into the 73 days to expiration series, the February series. There, I like the idea of selling the $60 puts here. That gives us a nearly 1.3% return on our capital, allows us to collect, let's say, about 80 bucks if we can get that. And if you can get that same 80 bucks, then I'm looking to use that to buy 3 of these $70 calls on the flip side for about 25 cents a piece, which should allow us to have an overall net $0 trade here, almost a $0 trade. You might have to pay up a few cents here, but other than that, we've been able to sell one put here, the $60 put, which is where I'd like to build the overall long-term position. And that $60 strike price comes from Fibonacci levels, which is where I think we can get to inside of Coke. And using that to try and, if, say, this is about to go from here with XLP turning, buy some $70 calls, which can immediately appreciate in value if we do see price start to go in that direction. So this is one trade that I like, and I like putting on that trade when we have that volatility edge, when price comes towards the bottom end of our volatility box levels where we're looking for long side setups. I hope you found this video helpful. For those of you looking for ways to go from sector to individual top holding trades using options in a way that you can finance the trade by selling some puts, buying calls and having an overall net $0 trade debit idea here. Take care, everyone. Good luck trading, and I'll see you in our next update.